Hey, strategic wealth preservation investors. It's Chris Vermeulen from thetechnicaltraders.com. And this is the quarterly report on the overall markets and precious metals. And I'm going to go over the stock market indexes first because what happens with them directly usually correlates to what happens with precious metals. And I find the stock market drives the main sentiment, main emotions, fear and greed, which also drives the price of precious metals. So taking a look at the SP 500, this is a 30-year seasonal chart, meaning on average, this is what price action of the S&P 500 does each month and throughout the overall year. Generally, the way it goes is we see the market want to rally up into May and top out in more or less June or July and then sell off into late October. And then we go into that last holiday Christmas rally, October being a significant standout low, and then it pushes higher into the closing bell for the year. If we take a look at the SP 500, this is going back to 2018, but if we zoom in just to last year's price action, we see the market rally up with its multi-waves, tops out in June, July, sells off into the end of October. We talked about this back when it was unfolding, that we're looking for a big end-of-year holiday rally. The underlying trends are very bullish, as we'll touch on in a moment here, to support that this was going to be a significant rally phase. And of course, we've had this big move. Now, the first week of January, we saw some selling, a bit of a pullback, and we're starting to see a strong bounce and reversal as of recording this video. So that's kind of how the seasonality has moved in the charts. And it's very important to understand how all this comes into play. The bigger picture here, though, when we move away from seasonality, because I do think we're going to run into some serious problems up here with the SP 500 getting right up into resistance of all-time highs. The stock market here, I do feel like, is going to push higher still. It's going to break the all-time highs from back in 2022, and we are going to see a very strong surge that could last a month or two to the upside before we see potentially a very big sell-off and correction. This could be a big double top. It could be a double top, doesn't need to be dead on. It can just fall short of it. It can also pierce and go slightly higher. But what's going to happen is we're going to see investors, which, believe it or not, a majority of investors are still betting on lower pricing, and they are betting on a double top, and they are short. So what the market is going to do, and I'll show you the sentiment here in a minute, is the market is likely going to want to push up. It is always hunting to hit a higher high or a lower low. And it's the higher highs and lower lows that create panic and make people get on the wrong side of the trade. It's extreme fear. When the market breaks a previous low, it creates extreme fear and people panic. When the market breaks to especially a new all-time high, anybody who's not long the stock market is going to feel like they need to get in. They are going to have extreme FOMO that they're like, I have to get in. The market is ripping higher without me. It's now at all-time highs. It's going to suck people into the markets who aren't in yet. And of course, anybody who's betting on lower pricing with short positions is going to be forced to cover. You can't hold on to short positions when things are hitting new all-time highs, especially if there's big volume behind it. So this is the perfect storm to suck in investors who have not got into the market yet. It's also going to get the shorts out. And the market is really well designed at once everybody is positioned in one direction, it's going to want to go the other way. So that is pretty much what we saw in 2023, the beginning of the year. Majority of investors in this sentiment was extremely bearish. People were betting on a huge sell-off. Instead, the market's put in one of the strongest rally years we've seen. Depending on the index, could be one of the strongest rallies we've seen in that short period of window of time. So that is what the market is setting up for. If we go and take a look at the overall sentiment of this market, I'm actually going to look at the NASDAQ here just because it's got more of the emotional moves in it. Now, we're looking on the right-hand chart, this color-coded bar. And what's really interesting here is orange bars are telling us that investors and traders are getting nervous. Deep red bars and bright red bars mean there's blood in the streets. People are panicking. They are just liquidating whatever positions they have. And once they're done getting out of their positions and there aren't any shares left, the market rips higher to the upside without them. We got the same thing happening here. We had red bars and deep red bars. People were panicking, expecting the stock market to sell off. And then suddenly the market took off and pushed higher right into the end of the year. We actually had this little wave rally, just like the seasonality was pointing to, that we've been trading and playing this whole move up here, which is pretty exciting to see it unfold. But you can see we've got orange bars, and just in the last couple of days, we got red and deep red bars. And now we got this big green bar telling us money's starting to pile back in. So more or less, people were betting on the downside, dumping shares. We saw that last week as well, the first week of January. And now we might see this market rocket higher. Everybody who's betting short is going to have to cover. So the NASDAQ is a really good representation of this, because it's a fast-moving index and it naturally caters to people who are actively trading and aggressive. And those are usually the more emotional traders. So you can definitely see the emotions in fast-moving stocks. Could be precious metals, could be Bitcoin, could be biotech stocks, or just tech or AI stocks. Naturally, the more volatile they are, usually the cleaner we can actually see the sentiment of the waves of fear in panic. So the NASDAQ is a good representation of that. Now, to take things one step further, let's take a look at the overall stages of the market, because this is going to lead into what's going to happen with gold. And then we'll go over the gold and seasonality charts there. But more or less, there's 4 stages to the stock market. The stock market right now is in this kind of the stage 3. It's coming up to try and do a double top or pierce to a new high, this complacency stage, trying to get people back long, getting people back into the markets. When the stage runs out of steam, we're going to go into a big financial reset. And that'll be like a 2000 tech bubble type of decline, could be a multi-year decline. It'll be like a 2008 financial crisis, whatever the crisis or whatever they're going to call it or name it after it happens. We'll find out soon enough, but we'll go into another stage 4 decline, a big reset across most asset classes. So we're in this kind of complacency stage. And it's really important to understand how you need to go about trading there. There's different strategies that work for different stages of the market, and all that's very important. But we just need to be aware that we're going into potentially a stage 4 sometime this year. And what happens with a stage 4 is we tend to see the stock market sell off, and it typically pulls gold down with it. So let's take a look at gold. Let's jump to the monthly chart of gold. Since this is the quarterly report, it's nice to look at the big picture of where these markets are potentially heading. So if we were to just look at this chart and go back, I believe 2019 was the start of the next major commodity super cycle when it comes to precious metals. I think it's actually very similar to 2000, 2001. And of course, we saw a nice big run up after that had happened, and we have seen that now. And then we saw back in time here, we saw a multi-year consolidation, a fairly big range this traded in. And then we started to see it run up just before the stock market put in a major top. We went into the 2008 financial crisis. Precious metals do very well. They become a defensive play, and they'll rally as the stock market's starting to top. So here we are in this multi-year consolidation again. It's now trying to break out, and we could see this run up for a few months and go higher as one of those defensive plays. Now, the problem, well, it's not a problem, it's just you need to be aware of this, is when the stock market does go into a financial decline, it is going to pull commodities down with it. We saw gold fall 34%, silver fell 60%. So if we do get one of these defensive rallies where we see gold, silver move higher, and potentially platinum, palladium as well, there's a very good chance when the stock market goes into full-on panic stage 4 bear market, we will see gold most likely and silver have some type of correction and come probably back into this range somewhere. Maybe just the upper end of the range, maybe it'll come deeper, but you do have to understand, I think there's going to be a lot of volatility, some exciting times and then kind of disappointing times. But after that is when we go into a multi-year massive rally. That is the financial markets, real estate, precious metals, everything has had a financial reset and it's ready for the second half of this move. So this is going to be a very exciting, interesting time, 2024 for precious metals. Going to be volatile. Maybe if the stock market tops sooner than later, gold will just come back down and continue to trade in this range until it's done. And then it goes off into one of these big, massive multi-year rallies. So we just have to wait and see. And as you know, my website is called The Technical Traders. And that is because we use technical analysis. And the nice thing is we don't need to listen to the news, pay attention to the Fed. We don't need to pick a direction. Is it going higher or lower? What we do is we follow price. We use the charts to tell us which way it's going. And then we apply our analysis. We follow and move in the direction of it. So if gold starts to take off, we can be long gold to the upside. When it rolls over, we can get out of it. When it turns back up, we can get back in. There's no guessing really that needs to be done. There's no hoping. It's just we follow the trends and manage positions. So that's kind of the scenario for gold. Let's take a look over at silver real quick here. Silver is doing fairly well. But in relation to gold, gold is trading up here near all-time highs, where silver is significantly lower, down about 50% or so. And that's simply because gold is the global safe haven play. It's a slower moving asset class, which means you can put more money into it and be comfortable. And gold is kind of that first commodity that investors think of outside of stocks and bonds. They naturally kind of think of gold. And so they accumulate it and they'll buy it and they'll hold on to it because it's more, they look at it as an investment. And so gold holds its value very well. And in times of uncertainty, we see it move up. So silver, if we look at silver, we had the 2001 bottom. It went into a multi-year kind of consolidation. You can see it had a big run up, but as you can see, it also had a big sell-off during the bear market, and then it went absolutely ballistic and took off dramatically to the upside. So I do think, either silver and gold are going to continue to work through this base for a while, or they're going to have a squeeze up as a defensive play and then come back and wait for the selling pressure to ease off in the financial markets. Because what happens is when we get into a stage 4 decline, almost everyone is bearish. Everyone is selling. People are getting worried. They're losing their retirement, their savings, everything. And there's a constant flow of money going out of the market. And so once everybody's finished selling who is going to be selling and who's, can't handle it anymore, that's when the market bottoms. And usually the precious metals market actually bottoms a month or 3 before the stock market does. And it'll start to rally and take off. And that'll be a good early warning sign to go forward for that. So that's a pretty kind of big picture view of it. If we go back to gold real quick here, we will just take a look at the highs that we've seen here. If we take a look at the highs using futures, we can see that there was that one breakout, that overnight trading session, a big short squeeze to the upside, and then it got hammered and sold down. So gold, yes, it has poked to nominal new highs, but it's trying to eat through this resistance, this area. It just hasn't quite got there yet. Now, for the average investor who kind of sees it during regular trading hours, if we draw a line across the high here, you can see gold has not broken out yet, really, for anybody with the ETFs that follow it. When you get rid of the overnight trading and pre-market trading, it kind of cleans the chart up to where the overall bias is. And it is holding up and trying to push and eat through this, but we haven't really had a big breakout just yet. So it's going to be very interesting how that goes. Obviously, I'm a big fan of precious metals. I actually put a big order in actually today as of shooting this video for you guys. So I have very excited about the precious metal space. I constantly accumulate and give it away as gifts and bonuses and things like that, just because it really is such a great tool. Insurance, investment, really interesting commodity going forward. So let's take a quick look at gold one last time here and the seasonality chart. If we take a look at the seasonality of gold, we can see that it naturally has a bit of a move up January, February, and then it kind of usually sells off into September. and then we see an end of year rally. So if we were to just take a look at what gold did last year and we just zoom in on this chart, let me just, I'll just go back to the daily chart here real quick. Not sure what happened there, but here we go. If we go and take a look at gold for the year, gold had its run up into May, more or less sold off. Started to sell right off here into the end of September. Right at the end of September is where it usually wants to try to put in a bottom, and then it goes into a rally into the end of the year. So both stocks and gold moved as expected. I don't expect that to happen every year. I find it doesn't follow that very closely, but I find when something follows it very closely for a full year, I find the next year it doesn't do that, which is why I want to bring it up, because there's going to be probably some pretty big wild price action in terms of these markets, because everything right now is hitting major resistance or support levels depending on the asset class. Stock market testing major resistance, gold testing major resistance. It's going to create for some big head fakes, meaning things could pop really quickly, rally for a month or two, and then reverse and crash really hard. So there's going to be some big shakeups, I think, in this market. But physical metals, definitely a way to store your capital. I love gold. I like them both, but gold is definitely more stable. I think it's got, if you're going for consistency, gold is kind of the way to go. Silver is that rocket ship, and you got to be willing to give back 50% of your holdings every now and then, or more. If you're not looking to sell it, it's more of a roller coaster ride. Anyways, that's it for now. Hopefully you guys enjoyed it, and take care. Bye-bye.